Welcome to Markets Now. I'm Michelle Rook with Kevin Duling of KD Investors, and grains leaning mostly lower with livestock futures cattle down. The hogs were up. And Kevin, let's start off talking about the grain trade. It felt like a heavy market on Monday. Was that just because of all this tariff talk again?
That was the big backdrop that I could see, over the weekend. Trump with the chatter against the BRICS nations, basically daring them to stop using the dollar, and if they do, then they'll get 100% tariffs against them. And there's a lot of countries there, which make up a very large percentage of the globe. So markets were scared of that. The dollar, spiked on the news, and part of the dollar spike was due to the euro too. There's some issues in Western Europe, but the dollar index is very heavily weighted the euro anyway. So, but yeah, that everybody's a little bit of, the funds act like they're deathly afraid of the tariff chatter, and anytime it's talked about, and even if it's just rhetoric, the market moves, the grains move lower, the dollar moves higher. So we'll see. We probably got to get into mid-January to actually get some action behind the words, and then see what the reality actually is on that. So.
Yeah, absolutely. And it feels like soybeans have probably taken the news the worst, but we've got a lot of other things that are weighing on that soybean market right now, don't we? I mean, we've had a lot of good export news, and we just can't get that market to go higher.
Not yet. Yeah, we've got some big numbers coming out of South America. They're not really running into problems yet. There's some hints of dryness moving into the north half, but it's still, the weather models keep pushing that back a little bit. But export trade has been fantastic. As long as we can continue that, we're good. So does the higher dollar really matter if we're continuing to export at that pace? Probably does in the short term, but probably doesn't in the long term. So I like that market longer term, but short term, I don't know, it's just not a good time of year. And honestly, we typically don't see highs made until, we get into that April, May, June timeframe anyway. And so this is just not a time to expect a sell window in soybeans. So.
No, and we also have talk of a record crop in South America, and their weather's been pretty cooperative, hasn't it?
Sure has. Yeah, they started out dry. They started out late. Looked like it was going to be a story early on, and then the rain showed up in a big way, and so far haven't let off. So we'll see as we get in the second half of their growing season and see how, if it ends up delaying the corn or not. And so there's still plenty of time to get some weather stories. We just don't have anything today. So.
And the wheat market leaning lower again. In fact, we've been down testing these contract low areas again. So what is the problem with that market? And from a price standpoint, should we be this low, do you think?
On a balance sheet, there's no reason to be where we are. We're way too cheap as far as the balance sheets go. Emotionally, the market's tired. I mean, it acts tired. And I didn't think we'd revisit the August lows and September lows, but here we are. And question is, how much do the funds want to throw at this? I mean, they make money every time they go short. It's one of their favorite spread trades, buy corn, sell wheat, buy soybeans, sell wheat, buy stocks, sell wheat. And they'll run that trade into the ground until they get forced out. And so we looked at deliveries this week, and they've been really low. Chicago's still at 0. Kansas City's just got a handful. That's kind of what you want to see. We're seeing positive cash prices across the world. So I think the cash market leads it out of here, but it's, we might have a tough month to get through to get there first. So
yeah, that disconnect that we have between the futures and the cash, really what's happening right now is there's a flight to try to find quality wheat. Is that what's going on?
Yes, and even more so now that Australia got massive rains. They've got some sprout issues popping up, and you're seeing a big soybean or a big protein move in the northern plains. I mean, 15% wheat's, a buck 30 more than 13.5 protein wheat. So yeah, definitely starting to pay for that quality stuff, and it's just going to get tighter as we go. And as we get in closer to next year's balance sheet, then we should start seeing some fireworks. So
yeah, what's the situation with the Russian crop? Because we hear about their export tax going out, up the amount of export quota or amount of wheat they have to export has been going down. What's the truth? What's going on there?
Well, from what I can gauge, it looks like the USDA is way too high on their export forecast for Russia. They're at 48 to 9, and it's probably going to be 43, 44. And so that 5 or 6 million metric tons is going to have to get moved to somewhere else. With these prices, import demand's booming. And, we've got the worst start in Russia, in probably 15, 20 years for the Russian crop. I mean, that northern half just didn't get time to establish and tiller. So they're kind of limping into winter in a bad shape. And, the stocks we had to start this year, we're not going to have next year out of Russia. So, we'll see what the government does. It sounds like they're trying to set a quota and it's not very high. So.
And is the wheat market kind of holding corn back, do you think? Because corn has had such good demand.
Corn has had fantastic demand. The export numbers have been just fantastic. And I assume domestic's moving good too in most cases. So yes, wheat's an anchor. Wheat's an anchor. Soybeans are an anchor. The dollar's an anchor. We need to see corn hold these areas. I do not want to revisit last Wednesday's lows or Tuesday's lows from last week. I do not want to go back down there on a technical standpoint. This is historically, when you factor in inflation a little bit, these are really cheap numbers and, very hard for anybody to make any money in this business right at the moment. So,
yeah. And, we talk about the demand there, but is there a fear that maybe all of this demand is front loaded? I think you and I have talked about this.
I don't think so. When you look at the long-term balance sheet, I mean, you look at the amount of corn out of South America this past year, and you look at all the other exporters, we're it. I mean, we're going to be the show for another 5-6 months. I would expect strong demand to continue. I don't see any reason why the corn. I mean, U.S. has the corn, and so we're going to sell it. So I think exports are going to stay strong, in my opinion. So.
And we did see a correction in the cattle market here to start the week and to start a new month. And that's despite, strong cash last week. Boxes were higher today. What moved that market lower?
I think it was mostly rumors. There was a couple rumors floating around. We had the Tyson plant closing rumor. We had rumors of the Mexico border opening back up. And so nothing real fundamental, but I would suggest that the producers really look hard at these numbers and what you can lock in with an LRP contract for next fall on your 25 calf crop, because man, these are good numbers. The stock market looks kind of spooky to me. The economy really looks spooky to me, and the cattle numbers look great. I mean, the fundamentals are great, but typically cattle make 3 to 5 year highs, and this is year 3. So, we're in that frame where these numbers could disappear by next year. So I think you lock in that floor and you sleep good at night.
Obviously something to watch. All right. Thanks so much, Kevin Duling with KD Investors. And that is Markets Now.